Welcome to my 10 lessons I've learned from investing in small cap stocks. Lesson number 10, discipline. Now, probably the second most important thing you can do is to get a strategy that you've based on experience. The most important thing is having the discipline to stick to that strategy. That's the hardest bit. It's easy to come up with a strategy. Sticking to it is very hard. Why? Because we're emotional beings, and the stock market can give rise to, feelings and decisions based on emotions that are not conducive to investing or successful investors anyway, And listen, the oldest saying in the world, as far as the stock market is concerned, is buy low, sell high. Simple, isn't it? Really simple. Buy low, sell high. What's hard about that? It couldn't get easier. You can buy low, sell high. Simple, isn't it? But it's not. Because when you buy a stock, it could go lower. When you buy a stock that's gone high, it could go higher. So, it's all relative. Now, when you buy a stock, okay, you expect it, you will it, you want it to go higher. So when it goes lower, it's a bit of a surprise or shock if you're not planning it. This is why you need a strategy and the discipline of the strategy to stick to it, to have a plan so you know what's going on. Now, in the stock market, when prices go lower, it goes red. Everything goes red. Danger. It's a colour of danger. And people run away. They start selling and run away, In the shops, when the prices go down, people run into the shops. So you've got to flip the mentality in your head. But you've got to have a strategy to deal with this. You can't just go in willy-nilly and start buying anything that's dropping, because there could be a fundamental reason why it's dropping. So having the discipline means you avoid the trap of basing your decisions on emotions and feelings. It's a thought-out strategy, and you've planned it in the cold light of day. So the only thing stopping you making money, essentially, on the stock market in small cap stocks is the price at which you buy and the price at which you sell. If you can get that right, if you get the buy right, get the buying part of the equation right, the selling is easier. If you get the buying wrong, the selling becomes a lot harder. So, after you research a company, price is everything. So you do research on a company, you like it, then you look at the price. Remember, P-I-E, price is everything. Pie. Everyone likes a pie. Remember pie, price is everything. So just because you research a stock and you like it, doesn't mean you should buy it. If the price isn't right, avoid it. Let it go. The most popular reason I've lost money on shares is because I've chased the price. I've thought, it's going away from me. It's rising, it's going now. At that second I'm going to buy, and it's starting to rise. I'm convinced at that minute the share price is going to go nuts and it's going to be a 10 back or something. It doesn't. Invariably, it doesn't. Right? Do not chase the price. That is where you lose money over and over again. Listen, you can buy a good company at a bad price and lose money. I've said this so many times. You can buy a bad company at a good price and make money. The ultimate combination, of course, is to buy a good company at a good price. And that takes discipline. The discipline to wait and have patience. So, if you want to make money, you've got to be disciplined when it comes to buying. Price is everything. Pie. Remember, price is everything. So, when you research a company and the price isn't right, walk away. There's plenty of opportunities. There's opportunities every day, every hour, every minute on the stock market. In small cap stocks, there's opportunities every day to make money. You don't have to choose that one. And do you know what? If you choose that one, the price isn't right, you're going to lose money. It's the last thing you want to do. So price is everything. Remember that. Price is everything. There are plenty of other opportunities out there. But if you really like the company, but it's risen strongly, here's what to do. Use a chart. And I'm going to show you now. I'm going to go into charts. I'll do a chart lesson later and more in depth of how I set charts up. But if you're an investor, not a trader, remember traders, in my mind, are lazy. They think it's the easy way. It's not. It's the easy way to lose money. Most traders lose money. They don't do research, they look at charts. If you're an investor, you should only use a chart to look for an entry and exit points. It should not be your reason to invest. A chart should not be the reason to invest. A chart should only show you when to invest. Okay, so you've done your research, you look at a chart. I'm going to go to a chart now and show you how you can get a good price. Okay, so here we are at tradingview.com. Okay, it's uk.tradingview.com, and there's a certain amount of levels that you have to pay for, but there's a certain amount of levels that are free. I think you can add 3 indicators onto a chart. So this is how I have my charts, and I'll show you how to set them up. But essentially, these are called bar charts. They're called candle charts. So you click on this, and select candles. It may be when you first set it up, it may be like that. So you set candles here, okay? And this means each day or each candle is a day, but you can change that time frame. So you can put each candle to a minute if you want, and obviously less information there, or an hour. But the standard default is a day. So each one of these candles represents a day of price action. If they're green, that means they've gone up. All right, if they're red, that's a day that's gone down. The share price has gone down. And you see this little so the body of a candle there, that's the open, the bottom of the body, that's the closing price. If it's green, obviously the green is higher. The little tail there is the range. So it's gone up to that level, but it closed at that level. All right, so that's the range of the price. I also add indicators. Now, you can add indicators up here and just select down. Now, what I add is moving averages. And so you click on them and then you can adjust what do you want to do here. So that's a 20-day moving average, inputs, a length, and that's the close of play. And style, I just choose your colors and your thickness. I always put thick, but I like to have 20-day moving average. I like to have a 50-day moving average in blue, and I like to have a 125 in sort of pinky, and the 200, the granddaddy of all moving averages, 200-day in red there. Okay, and I also like to put these on, more indicators here. So just go there again, click on an indicator, and this is MACD, that's moving average divergence convergence or convergence divergence. And these are two different moving averages, two different time frames of moving average, and when they cross and all that stuff. I'll go into that later, but at the moment it's not important. I just want to show you something else about having the discipline to wait and have patience, because that's what it's all about. And your success will rely on your discipline to have patience and get the right price. So important. And this is the RSI. I mean, on TradingView, there are basic charts on Vox. By the way, if I for example, if I click here, and you may have seen I might want to stop there, but for example, if I go here, you can just hide that there, and scroll down. These are already preset on Vox. You can do that's exponential moving average, simple moving averages, but I like to set up my own charts. I'm a bit of a stickler. I've messed with charts ever since I've been investing. You wouldn't believe when I was younger, I used to try there's millions of metrics, millions, and a chart is like a hairstyle. People have it their own style, their own way, their own wardrobe. It's like fashion. You find what suits you in the end. I've pretty much gone back to default. You can do exponential moving averages. You can do all kinds of these kind of things. But I like to do simple moving averages and 200-day, 125, 20, and 50. If I were you, if you got only 3 indicators to add on a chart for free on TradingView, that's the case, then I would add an RSI. I'd have the 200-day moving average and the 50-day moving average. All right, that's what I do. Okay, so if you like a company and the price, this is a good example. This is Gfinity, all right? It's a, let me move this across here. It's a sort of gaming company, computer games company. Okay, so it announced a good deal today. And look at it. It went from 10.6 to 12%. What is that? 20%, something like that? Yeah, 20% up. That's a big rise, you know? So they land a contract. You like it a lot because you've been watching it. I've got to get in here. I've got to get in. This is why you don't jump in straight away, okay? You're going to jump in at 14 pence because that's the range of the day. So that spike there, that wick of the candle. So the body here, so it opened here in the morning. It went down to this point. If you bought there, you'd be a bit of a genius. So it went down to this point at one point of the day. It went all the way up to 14 pence, came back to 12 pence. Now, if you get carried away and use emotions and have discipline, you'll probably be buying up here somewhere, okay? That's not what you want to buy. You want to buy down here. So thinking, okay, I like that move. If you have the discipline to stay out and say, I'm going to wait to see where it goes tomorrow. I'll see. Because sooner or later, it'll have a down day. Like I always say, always buy a down day. But you're busy. You're looking at other stocks. You know, you may miss it. So what do? This is what you do. And I've done this, for as long as I've been investing. And if I can have the discipline to stick to it, I always do well. Always do well. So this is what you do. Where am I going to be happy that buying? It probably won't come back to this level again. I mean, you could just place an order in, a limit order in with a stockbroker and say, I'll buy these shares at 11.3, okay? But you can't do that with lots of companies because obviously you need loads of money. So what I'm going to do is this. I'm going to right-click here, add an alert. And there we are. I want 11.3 pence. Create. There we are. I've created an alarm there. There they are. Loads of them. So I've created an alarm at that level. It will let me know when the share price hits that level. In the meantime, I just forget about it. Walk away. Walk away. Don't buy a spike. You buy a spike, you will lose money. So walk away. Research another company. Get out of there. Let the emotions calm down. Just get out of there. That's what you need to do. Set a price alert. And then, every now and again, you will ding, 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 ding. You get a little alert. You research the company. Make sure nothing's changed. It's come back to your price, the price you're happy to pay. And you're thinking, okay. And do you know what? Let's see if you have the discipline then, if it's on a down day, on a red day, to say, I still like this company. I'm going to buy it at a better price. Because it's so easy. People, for some reason, want to chase the share price when it's going up because they're scared of missing out. The fear of missing out. FOMO. That is dangerous. That will make you lose money. The hardest bit is to have discipline of patience, wait it out, then buy on a down day. It's counterintuitive. Like I said, unlike the shops, when the prices go down, people rush to buy. In the stock market, when prices go down, people step back, move away. You need to be moving in. When others are moving away, you move in, okay? That's the way to make money, okay? Hope that makes sense. So that's a bit on charts. I'll do a bit on charts. This is my last lesson in the series. Thank you very much for watching. I will be doing other one-off videos a lot more, hopefully now. Maybe even the thoughts of the day, because I want to do a lot more videos. But by all means, if you like this, please share it, give it a like. Any questions, comment below. But discipline is so important, okay? And by the way, don't forget, check out voxmarkets.co.uk. Loads of free tools on there. The app is phenomenal for RNS alerts, straight to the front screen of your phone. Whenever you follow a company that you have, they release significant news, it's straight to the front screen of your phone. So don't forget that, okay? So I'm down on that. But by all means, most important thing of all, if you could, subscribe below, okay? Hit that subscribe button. And I don't know when I'll be doing my next video, but you'll get it straight to the front screen of your phone. Oh, and by the way, if you hit the little bell button there, you'll get a notification whenever I release a video. Thanks a lot for watching this series, like I said, and share it, subscribe, and do everything else. Speak soon.